Moving on to our agenda, we'll be listening to a presentation on ICD London Stock Exchange Group Islamic Finance Development Indicator Report. This presentation will cover the outlook of the global Islamic finance industry, the current landscape, and the sector's performance while highlighting key opportunities and challenges. It will also provide insights on Malaysia's position and key facts about the Islamic finance industry in the country. The presenter is the head of Islamic Finance, London Stock Exchange Group, Mr. Mustafa Adil. Please welcome. Mr. Mustafa, please enlighten us.
Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen wa salatu wa salam ala Sayyidina wa Nabiyyina Muhammad wa ala alihi wa sahbihi ajmain. Your Excellencies, distinguished guests, Assalamu alaikum and good morning. I am delighted to be here with you today at the Global Islamic Finance Forum to launch and share some of the insights from the Islamic Finance Development Indicator Report. This is a report that we have done in collaboration with the Islamic Corporation for the Development of the Private Sector, the ICD, which is a part of Islamic Development Bank Group. And this is in fact our 13th year that we have done this report in collaboration with them. And this year really is a milestone year because it has been 50 years since the launch of Islamic finance. The Islamic Development Bank was established and launched in 1975, 50 years ago from this year, along with the first Islamic bank in the world, Dubai Islamic Bank. And it truly is a milestone for the industry. To start with, I want to talk about what is the Islamic Finance Development Indicator. This is an indicator that was developed by LSEG and ICD to measure the overall development of the Islamic finance industry across markets. The indicator covers over 140 countries and looks at 5 different dimensions. Obviously, financial is the most significant, and we look at multiple sectors within the financial pillar. But beyond that, we also look at the ecosystem. We look at governance metrics. We look at awareness. We look at sustainability and ESG considerations. We look at knowledge and education, because we want to give a holistic overview of the development of the Islamic finance industry, not just a singular dimensional one. If we look at the overall development, if we look at the global map, we can see that the Islamic finance industry truly is global in its nature. Whether you go from Australia or Canada, you go from South Africa to Russia, you'll find that in every major market and region, there is some form of Islamic finance activity. That could be Islamic banking, that could be Islamic funds, it could be specialized institutions like Islamic mortgage providers or Islamic lenders. It could even be educational institutions that are providing courses or training in Islamic finance. But when we look at the most developed markets, that generally tends to focus in Southeast Asia, tends to focus in the GCC and other key markets as well. I want to look at the top 5 countries. Malaysia, which has consistently been the #1 since our indicator was launched 13 years ago, but also Saudi Arabia, UAE, Indonesia, and Pakistan. And that top 5 has changed significantly since we launched. But what is consistent and common amongst those 5 countries is that they all have government-led national strategies for the development of Islamic finance. In Malaysia, you have the strategy being led by MIFC and various other institutions that are playing a role. In Saudi Arabia, Islamic finance is a key part of the Vision 2030 that the government launched a few years ago. And since then, Saudi Arabia has become one of the largest issuers in Islamic capital markets and has developed further their Takaful and Islamic banking propositions. UAE has been leading in Islamic finance, whether it was the Islamic economy strategy that was launched back in 2013, through to the development of the HSA at the central bank, to now recently this year, the UAE launched their national Islamic finance and Islamic economy strategy, which aims to more than double the total Islamic banking assets in the next 6 years. Indonesia has had a very prominent rollout of its development of its Islamic finance strategy consolidating institutions, building capacity, building capital to be diverted to the Islamic markets. And Pakistan, as you heard earlier, has also, through the verdict of the Sharia court to convert the ecosystem into an Islamic-based ecosystem, has developed a number of strategies to help roll that out. So we see a lot of this development, and we definitely see that having a national strategy does help to develop Islamic finance in those markets. If I look at Islamic finance globally, I mean, we've heard a lot today that Islamic finance is over $5 trillion, but actually the number is much closer to $6 trillion. It's 5.99 trillion based on disclosed figures at the end of 2024. And when we do this indicator, we actually do a bottom-up analysis where we look at every single Islamic institution, and we can drill this number down to the last dollar, exactly where it's coming from which institution, from which market. So the industry is almost $6 trillion. About 72% of it comes from banking, 17% of it comes from Sukuk. Combined, that's almost 90%, and the rest come from the other markets. It's expected to grow to $9.7 trillion by 2029. It had exceptional growth rate in the last year. From 2023 to 2024, it grew by 21%, and it is continuing to grow. What is interesting is that we hit $5 trillion in the first 49 to 50 years of Islamic finance, but the next 5 trillion is projected to be hit in less than 7 years. So that is exponential growth that is being achieved in the industry, being driven in a number of different markets. I want to drill down to some of these sectors, starting with banking, which is the largest segment by size. It makes up about 72% of the industry. What is interesting is that there's nearly 700 Islamic financial institutions that are offering banking services today, whether that is fully fledged banks or whether that is banking windows. And this market is expected to hit $6.9 trillion in the next 5 years, and highly concentrated in the GCC and in other MENA, which primarily consists of Iran's assets. The second largest market is the Sukuk market. That is about $1 trillion at the end of 2024. As of the end of H1 this year, that was about $1.15 trillion. That is expected to grow to 1.8 trillion in the next 5 years. And this is an area where, you can see Southeast Asia and the GCC play a very prominent role. They dominate the market in terms of the largest number of issuances, in terms of liquidity, in terms of the variety of issuance, so on. And what is interesting is that today there's over 4,700 Sukuk that are outstanding, in local currency, in USD, short-term, medium-term, long-term, across the spectrum in terms of the instruments as well. Coming to Islamic funds, Islamic funds makes up about 5% of the Islamic finance industry, but is one of the fastest growing segments. It grew by 21% last year. There's about 2,600 funds that are outstanding. This is expected to grow about to over $500 billion in the next 5 years. And what is interesting here is that this is one of the sectors or segments of the Islamic finance industry where a number of non-Islamic markets play a significant role. And you can see that Europe and the Americas play a significant role. You'll find a number of funds being established in the UK, a number of funds being established in Luxembourg, in Germany, in the US, in Canada, and various other markets as well. So this is an area where outside of the core Islamic finance markets, you do have a significant threshold as well. When it comes to Takaful, this is another smaller segment in the Islamic finance industry. This is an area, that's about $136 billion in assets. It's projected to grow to $395 billion in the next 237 billion in the next 5 years. And this is an area where Southeast Asia plays a much more significant role than the GCC. So, when it comes to Islamic banking assets, GCC is much more significant. But when it comes to Takaful, the Takaful industry in Southeast Asia, whether it's Malaysia or Indonesia, is much more developed, much more significant. And I think that reflects the overall development of the ecosystem. And this is identified as a key area of focus, whether it's the UAE strategy, whether it's the Saudi strategy, to continue to develop the Takaful industry, to bring it in line with some other leading peers in the market. And then lastly, the report also covers other Islamic financial institutions. What are the Islamic financial institutions? These are essentially specialized institutions that focus on a particular area of Islamic. So this could be mortgage lenders, this could be murabaha financing companies, and so on. These institutions, there's a lot of them. There's over 1,100 institutions operating in different markets, particularly in markets where Islamic banking is not well developed or where there may not be lots of options for Islamic banks. These institutions tend to have slower growth than the rest of the industry because they're not deposit-taking institutions. So they cannot generate the type of asset growth through deposit holders. It can only be done through invested capital. So the growth rates are much less than in the Islamic banking side, but they do cover a significant need in markets where Islamic financial or Islamic banking services are not as readily available to the consumers. And then beyond the financial, I also want to focus on some of the other ecosystem-related elements of the industry, starting with the governance landscape. And I think this is quite significant because governance helps to drive the development of Islamic finance in most markets. What we see in particular interest is there are today 23 jurisdictions that have central Sharia boards, either at the central bank level or at the federal level. And this is something that's quite interesting. I think about when we started this report, there was only about 6 or 7 central Sharia boards that were operating in key markets. Today, that is 23. That means more and more countries are recognizing the significance that a central Sharia board plays. And they have different authority. In some jurisdictions, they are purely advisory in nature. In some jurisdictions, they have direct control over the products and services that can be offered by institutions. So the variety is quite significant, but there's a general recognition of the critical role that central Sharia boards can play. We also see in the report, you will see a number in terms of the number of scholars that sit on Sharia boards, 1,600. You'll see the geographic split of where those scholars are based and so on. And we also provide a disclosure index that looks at what is the level of disclosure that Islamic banks are providing when it comes to relevant transparency in the Islamic finance space. Beyond that, a critical component, sustainability. That is something that has been referenced numerous times, and we felt that sustainability was something that was core to the development of Islamic finance, and we started to measure some basic metrics around sustainability. We're looking at sustainable or ESG-aligned Sukuk. We're looking at ESG-linked funds, and the report also looks at disclosures related to ESG considerations. So there's a lot of numbers and figures. We look at a number of different jurisdictions, but I do encourage you to look at the report to get some of the underlying data as well that relates to this area. And then lastly, I want to touch upon knowledge and awareness, and I think it is quite important, significant that we look at this. We've mentioned numerous times today the importance of capacity building, and I think it's important to recognize what is the landscape of development when it comes to that. We have over 1,000, almost 1,200 Islamic finance course providers that operate around the world. We have 750 institutions that offer Islamic finance degrees at various levels, whether it's undergraduate or postgraduate level. And you have a number of different research papers. In terms of market leaders, again, a number of the top 5 countries that were there in our indicator are leading when it comes to Islamic finance education. So the likes of Indonesia, Pakistan, the UAE, Saudi Arabia, Malaysia are all leading in this space, and that also reflective of their overall leadership skill when it comes to the overall indicator. And then in terms of events as well, in terms of in-person events, in terms of Islamic finance news and others, again, these are activities that help to create awareness of the Islamic finance industry, and the indicator measures and models that number as well. Ladies and gentlemen, this was just a brief overview of some of the key insights that have come out of the report. I do recommend you to please, click on the QR code. You can visit the website. It's also available on lseg.com under data and analytics. It's available on zawiya.com. We provide the full underlying data for the 140 countries that we cover across the different dimensions and across the different metrics. So I do encourage you to please download the report. It's free to download for anybody, and go through the data and see how the industry has developed over the last 50 years. With that, my time has run out. I was delighted to be here. Thank you very much for your attention.
Thank you, Mr. Mustafa Adil, for that insightful report presentation.